The 10-year Treasury yields break at 3% has, of course, caused a good deal of worry in the markets this week. But I think investors may have their eye on the wrong ball here. Now, a bigger story developing could be the 2-year notes eclipse of the 2.5% rate. That's a 10-year high and a level that can make bonds more attractive than stocks, especially in this volatile environment. Now, consider this. Doesn't it make more sense to buy a risk-free bond for 2 years at 2.5% return than it does to hold 10-year paper for a 3% coupon? Now, many investors think so. Of course, U.S. equity ETFs have seen outflows of $868 million over the past month. At the same time, shorter duration bond funds have seen inflows of $5.2 billion. Now, this comes at a time when the S&P 500's dividend yield is just 1.9%. Now, how high levels can go from here, it's a very unsettled question at this point, but the rising yield picture is certainly giving investors more to think about. Guys?
Jeff, very interesting take, and I can totally understand that short-term point. What is the relative high compared to a longer time frame? Clearly, as you say, this is roughly a 10-year or 9-year high for the 2-year at the moment. What about if we go further back? What was typical of the shorter term?
Well, I mean, if you went back a year before the financial crisis, back around 2007 or so, back into 2006, even 2 years before, we were talking about a 2-year yield with a 5%, or two-year note with a 5% yield, which, I mean, looked like a pretty good play back then because you could just sit there and clip a 5% coupon while all of the tumult was going on in the market. Now, there's a lot of things to unpack here. I think one of the things that you have to look at is just, you know, for so long under the Fed's QE programs and zero interest rates, cash and cash equivalents you were forced out of them. That's no longer the case. So that gives investors a choice. Now, there's also the other question of, you know, why are yields going up? Are they going up for good reasons? Are they going up because we're seeing appreciable growth in GDP and inflation? The feeling that I'm getting from a lot of folks in the market now is that maybe we're a little bit out over our skis as far as yields go. But it's an important question that investors are going to need to ask, especially with a 9-year-old bull market in equities.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.